So how to launch the billion-dollar startup or business? Step number one, throw out this idea as soon as possible. Many people, they're really addicted to build some kind of unicorn, but as you know, it's almost impossible. The probability to build the billion-dollar startup is almost zero. Like, you need to focus on building some kind of small or medium-sized business and raise it organically. Currently, all the startups and investors are really focused on building some kind of big capitalization. And finally, we get a lot of dozens of products which have market cap of billions of dollars, but they generate negative profits. It's a really problem of the market. The examples is everywhere. It's Uber, it's Lyft, it's Arrival, it's Snapchat. You know these products as well and you use them every day, and they have large negative profit. In my opinion, instead, you should be focused on idea to building the business which will generate net profit. Because it's much better to build some kind of middle-sized business than to build a startup like $1 billion or $100 million startup, but which has no chances to become profitable one day. So how market bubbles are created? Like everywhere it's some kind of unicorns hype. Like everybody reads TechCrunch, Crunchbase and other resources and see like success stories of people who become successful entrepreneurs and finally get like billions of dollars of capitalization. Finally, we get a lot of founders who frame their business to raise investments. And investors try to target revenue and valuation of the startups because each of the blocks of this Lego wants to sell their share one day. And the problem is that finally you will be responsible for this selling because you will buy the stocks of the startup in IPO and you will be responsible for this bubble. You will pay for it. So investors try to target revenue and valuation of the companies, and investors' goals is to sell the share finally. So the problem is that capitalization, not profit, is being maximized. It's like some kind of market share syndrome. Like we have big valuations, but no profit at all. And finally we get a lot of defaults, crisis and bankruptcy. Step number two, understand that focus on capitalization is equal to fail. Like for the last 6 years, the number of unicorns raised 10 times. It's a big number. And the problem that the overall capitalization is equals almost $3 trillion. So honestly, I expect the new era of .com crisis because the problem is that price earnings ratio is in the maximum level. So if you will build the graphic of PE ratio, which shows like the capitalization of company divided by the earnings of this company, the index will be higher than it was in the .com era. And this is really a problem of the whole market. However, the investors have understood this problem, and after 2021 peak, they sufficiently decreased the amount of money directed to the startups. And as a result, in quarter number 4 of 2022, we finally got just 19 unicorns, new unicorns. And as for comparison, for the last 20 quarters, starting from 2018, the year of World Cup in Russia, by the way, it is the minimum amount of new unicorns. Some genius research was made about this topic. They took 73 startups which went to initial public offering, and do you know, just 6 of them are profitable. So just 6 startups from 73 who went public are profitable. It's just 8.2%. It's enormous number, enormously little number. Some kind of the startups, it's Etsy, it's Zoom, it's Square, Common Knowledge, but it's also a lot of startups which with big negative profits, and their ratio of profits, negative profits, not profits, negative profits to revenue is enormously little. It's like some kind of Moderna, Snowflake, Lemonade, Pinterest, and dozens and dozens other bubble startups. Moreover, 21 of the 73 startups had losses greater than 50% of their revenues, and another 13 startups, including Uber, Lyft, Pinterest, and Snapchat, had losses greater than 30%. It's a lot. Step number 3. Product market fit. timing and team is the key to your success. Judging by the research done by CB Insights, the no market need problem is the second problem why startups fail. The number one problem is that startups run out of cash, but you cannot control this problem because it's deeply connected with economic tendencies being happen in the market. So no market need, in my opinion, is number one issue which you can control and which finally causes the fail of billions, dozens startups. Bill Gross, being the participant of famous TED Talks, tried to explain why startups fail. He took the database of 200 startups where he was investor or founder. And the thing is that he took only well-funded startups. So running out of cash cannot be a problem here. And what he get? He get finally that the startups who succeed differed from the startups who failed just in terms of timing and the team. So timing, team and execution is the main reason why some startups succeed and some startups fail. Judging by this research, timing was the cause why 42% of startups was successful. The examples of the startups is Airbnb, Instagram, Uber, YouTube and LinkedIn. And team was the reason why 32% of this startup succeed. So in my opinion, Bill Gross explained to us that funding is not important. Yes, it's important to have money to invest in your team, invest in new technologies, in R&D and so on. But all the startups were well funded. So you should be focused on timing, team and the execution of this team. Target, product, market fit. The famous Silicon Valley investor Ben Horowitz, the founder of one of the most successful venture funds, Andreessen Horowitz, has written in his book that to build a successful startup, you need to build the product, which will be 10 times better than the nearest competitor. It doesn't mean that you need to build the product which will be in all parameters better than competitors. For example, imagine that you are building the electric car companies as Tesla, and you need to target at least one important for the client's variable. For example, it should be charged 10 times faster than the other electric producers, or it should be 10 times more beautiful than other cars, or for example, it should be 5 or 10 times cheaper than other electric or non-electric luxury cars. Also, the good definition of product market fit is when your product achieves the plateau in retention. So let's look on this graphic. The red line, I'm not daltonic, the orange line has no plateau of retention because it goes to zero permanently. The green line has plateau of retention in the level of 50%. What does it mean? Let's imagine that we build with you some banking retail application for users as me and you, and we try to measure the retention of transactions. So for example, 100 users came to us yesterday, next day just 30 of them made transactions, next day just 20 of them make transactions, and so on. And finally we get that from the new cohorts of clients, we stabilize the number of 20 people from 100 people who continue to make transactions regularly. That will be our retention. We should take these all cohorts and average them. And actually your goal is firstly try to build this retention, because it can be quite low. It can be just 2% or 5% or 10%, but it's better than have no retention at all when finally all your users go to zero. And your second goal is to uplift this retention and try to move it from 2, 5, 10% to 30, 40 or 50% as it's shown in the graphic. So is product market fit a binary variable? Absolutely no. It's like a gradient. It can be different. It can be bad or good. It can be better, better and better. And also the second thing about product market fit, that it's different in time, in geographical market and for different audiences. For example, you build some kind of event application, and your application can has good product market fit in Dubai because it is Expo in Dubai, it's a lot of events, many tourists come there and so on. But it can be bad in Baku, because Baku it's a calm city where people like to eat kebab, they like to smoke shisha and lay in the sofa. That's why the product market fit and as well retention in Baku will be not so good as in Dubai. So how to raise the retention and the product market fit? Look on this schema. Like switching to a new product is a dilemma, because to make the clients, the potential clients switch to your product, you firstly need to push them, so they need to have some problem with existing solution. Secondly, you need to pull them because they need to understand the benefits on this solution. And like these benefits divided by the problems should equal to 10, at least 10 number. Also, the current products which they use should bring some kind of anxiety to them. And also, the existing habits will block and will try be an obstacle for you to move them to your solution. So finally, the problem with current solution plus the benefits of your solution should be much better than the worries about your solution plus habits using current products. So the main idea of this step is please spend less time on development and more time on searching of product market fit, because the IT sphere has a great level of uncertainty, and to determine this kind of uncertainty you actually need to focus on searching, constant searching on product market fit. So let's look on this schema. Like during the whole process of building the minimal viable product of your idea, you need constantly try to search product market fit. Let's imagine that you are like the only founder now and you have not built the team still. Like you need to start with deep interviews and online surveys just to generate hypotheses and check them. You need to understand that every stage of development of your product, it's like constant kind of generating and checking of different hypotheses. So step number one here is you should make deep interviews and make a lot of online surveys. Then you need to try pre-sale your product. Let's imagine we make with you some kind of Dropbox, like the cloud storage of your files, videos, pictures, and so on. And you shouldn't wait the release of this product and when it will be on production in App Store, Google Play, or web internet. You just can build the landing page on some constructor as ReadyMac or Tilda. You also can upload the prototype of your product, like building Figma there, and you can make it like in a couple of days, this prototype. And you can try to sell the future clients this product. You can buy a little advertisements in Facebook, on Instagram, and target your target audience and try to understand whether they will try to register on your product or not. And when they will try to register to your product, you just can show them some success screen and show them, thank you for the first registration, you will be our first users. Unfortunately, we have not launched yet, but it will be free for you forever. This product will be free for you. What it will give for you? It will give you a chance to understand, firstly, do you understand your target audience? Like, do you make right advertisement to the right people? Secondly, is your landing page and are the problems mentioned in the landing page are really sufficient to make people convert, because you will look to conversion rate. And thirdly, you will collect the database of potential clients who will automatically go to your product after the launch. So you will not start from zero. Then you can make pre-launch of your product. So for example, 2 or 3 weeks before the launch of your product, you can notify these people which you have already collected previously and ask them, we make pre-launch, you can register, you can try to use our app, and you can give feedback for us. And then after the official launch, you need to pay a lot of attention to product analytics. You need to calculate retention, and finally, if you will have some plateau of this kind of 50% retention, that means that you have a product market fit. You have successfully found it. Choose the right timing. Actually, it doesn't mean that you need to generate some idea and then wait years and years when this idea will be actual, when the market will have a need on it. It means that you need to understand and research the contemporary trends and build the idea which will be framed by these trends. For example, like 20 years ago, social network was a dramatic trend. Like then 10 years ago, the ride-hailing apps was a trend, like Uber or Yandex Taxi or Lyft. 5 years ago, the neobanks became a trend because finally all the technological upgrades were finished and companies started to build startups which reframe some kind of regulation. That's why neobanks became so popular. For example, 4 of 10 most valuable startups now are fintech. It's like Stripe, Klarna, Revolut, and Nubank. You will ask me what is the trend now. Of course you know it because all of you are tired already of ChatGPT, and the current trend is laziness. But not laziness, actually, it's artificial intelligence, machine learning, because machine learning is the key of solving your laziness. That's why you don't want to spare more time on writing content. You want to use ChatGPT. You don't want to search the videos. You want to use YouTube and this feed which automatically match you and videos you want to see. You don't want to draw images or even browse them to find some images to your presentation. You want to use Midjourney. So the current trend is artificial intelligence and laziness of people. So building your product, whatever sphere it would be, like cars, marketplaces, and so on, you need to take in mind that people don't want to spare more time on search. For example, you build some kind of new marketplace. It can be marketplace of real estate in Dubai, which will work without realtors. You should take in mind that if your marketplace will give the user one-page feed, when they will not have a need to sort the offers or filter them, they will just look on 5 or 3 offers and choose one of them one by one in the one-page feed. It will be a great solution. Build a strong team. In my opinion, the most important step, because the team is the key of success. You can pivot your idea as much times as you need, but only strong, sufficient, agile team of really advanced specialists will allow you to do it rapidly and to understand when you need to pivot. Secondly, the strong team will help you to minimize the time to market, because one strong developer is better than 10 middle or junior developers, because he knows how to write code rapidly and build a good architecture with less bugs, and you finally will spend less time to support your customers. Thirdly, the principles and the DNA of your co-founders will become the culture of the company if you succeed. So let's imagine I have 2 co-founders, one of them developer, one of them designer, all of them transparent, all of them quite brave, all of them try to learn a lot. Finally, these things will migrate to the DNA of my future company. Even one person can significantly influence the success of the company. Let's take the most actual example. The YouTube CEO came to the YouTube approximately at 2014, and YouTube valuation was about $5 billion. The current YouTube valuation is about $28 billion, and currently YouTube is the second website after Google in terms of visits. YouTube has more than 14 billion visits monthly. Just Google goes ahead of YouTube, and of course Google owns YouTube, if you didn't know. So YouTube even went ahead of Facebook, because Facebook has now about 12 billion visits and YouTube has 14. Of course, it's a complicated model, it's a lot of parameters which influence success, but such a dramatic difference of course, also was rich because of the CEO of YouTube. I cannot actually try to pronounce her surname. It's Wojcicki, because I read it, it's funny, but maybe write in comments how to pronounce it in the right way. So frankly speaking, I adore one research which was made by some guy called Alita Masep. He took the most successful startups and tried to analyze how different parameters of founders and their background influence the success of the startups. And what he found out, firstly, you need to hire at least one technical CEO, because the half of the startups were founded by technical CEOs. Secondly, try to build small but cross-functional team, because 87% of billion-dollar startups had from 1 to 3 founders. And of course, it's better to make these founders cross-functional. So in my opinion, it's better to have one product founder, one backend founder, and one designer founder. Or for example, if your product somehow connected with web or app, it's better to take 4 founders: product, designer, backend, frontend, or iOS, Android, or Flutter. So take different people with different background, and the magic will happen. Also, you need to take experienced people, motivated, experienced people, because judging by this research, the most of the founders, they worked in the big successful corporation as Google, Oracle, IBM, and so on. And of course, IQ matters, because 38 of billion-dollar startups were built by Stanford graduates, as well as Berkeley, MIT, Harvard, and so on. It doesn't directly show us IQ, but I believe that clever people go to Stanford and finally raise big investments and found such startups as Snapchat, for example. And of course, pay attention to the soft skills of your co-founders. Yes, as you know, developers are not the best artists. They do not have great soft skills. They cannot sing or play in the big public, but nevertheless, they need to be capable to negotiate. Judging by statistics, with the exception of healthcare and biotech startups, only 30% of the founders of billion-dollar startups in consumer tech had previously worked in the same industry, and only 40% of founders of billion-dollar startups in SaaS space had worked in the same industry. What does it mean? It means that soft skills such as managing team, sales, and having a strong network and resources are more important than experience in a specific industry. Understand my history of fail. I always wanted to build some kind of billion-dollar startups, and finally I've built none of even million-dollar startups. Yes, I have good position in my company. I trying to build my new startup based on the failures I had. But what happened? When I was 18, I generated the idea of Twin. It's the application for finding and organizing events in the format of social network. We raised 2 rounds of investment. We had a big team of more than 10 people in like our staff. We had a great office near Red Square, like just 1 minute from Red Square. And actually I was a star of university, because when I was 18, I got money, I got startup, and I got fancy office. But eventually we failed the startup without any result. So why we failed? Firstly, we had not cross-functional team. Every one of us is successful now, separately. But we had the same experience of school, because we had no other experience, and we all were managers. We hadn't got developers as our co-founders. Secondly, we attracted investments too early. The later you attract investor, the better for you, because the lower share you will give for him. And also pay attention that you attract the qualified investor who has a lot of connections in your sphere and will help you to promote. Thirdly, we spent 1.5 years on building MVP, because we have built a great application with a lot of functions as map, chats, payments, QR codes, and so on. We had dozens, thousands of lines of code. But finally we launched MVP just in 1.5 years. You need to focus on your core functions, which solve your client's need, and launch from them. Because I believe that we could launch this startup just in a couple of months. The other mistake is that the first hypotheses were tested just after the release. You need to start to make as dev as soon as possible, even before the development. We wrote 100 pages business plan and built astonishing presentations. You don't need it. Man, you don't need it, or girl. You need to focus on finding product market fit. You need to be agile. You need to pivot as much time as it possible, and you will succeed. You don't need to build strategy for 100 pages for all the scenarios which are probable. And finally, we work with freelancers, because we didn't want to give share to other people from other spheres who weren't our friends. Don't take freelancers. Take the best tech guys who you know, the best backend developers, the best front-end developers, data scientists, designers. But remember that you should have no more than 3 or 4 of them. And give them the equal share in your product. And they will be highly motivated. You will not lose any money on freelancers, and you will take the best specialist in your sphere. It's a bonus from me. It's the only statistical model about success of startups. I have built a statistical model based on Crunchbase data. Crunchbase is the biggest database of data about startups, both public ones and privately owned ones. And I built the simple regression based on all the unicorns to understand which startup succeed and which not. So what factors became finally significant? Firstly, it's quantity of events which were visited by the founders. It's interesting, but the more you network, the more you interact with other founders, partners, or potential investor, of course, the higher probability you will succeed. Secondly, it's date of incorporation of the company. The earlier you start, the better the chances to succeed. Then it's magic, but it's bounce rate in your website. So the more users you lose in the first 3 seconds of visiting your website, the less chances you will have to succeed, because it can mean that you have bad landing page, or moreover, the problems described in your main page of your main site are not in line with your potential customers. You say to them, attract people to the events, create your own events, but maybe people don't have the problem of creating the events and attract people to these private events. And also it's number of patents and trademarks, but I cannot comment it somehow. For sure, you cannot look here on the education of founders or experience of founders or some other fact. We have collected all the data we can have access on the internet and use it. Of course, a lot of important factors are lost here. So let's make conclusion of this, I guess, essential for your video. So you need to frame your startup as a profitable one from day one. You can focus on testing the hypothesis without even writing a single line of code. You should try to attract the best people, cross-functional people, and motivate them, making them co-founders of your company. The faster you go to market, the higher probability that you will find the product market fit and your competitors will not be more rapid than you. Follow trends, go to existing markets, and try to make your product at least 10 times better somehow than your competitor. Enjoy your work and understand that during the most hard moments, you decide whether your product will be successful or not. Because as Ben Horowitz said, the only thing which can differ successful founders from unsuccessful ones is that how they behave during the hardest moments. That's all. Thank you all. Subscribe to my channel I love you all.